Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, June 1st, the year 2018. Let's talk trading. Weekly wrap up, monthly wrap up. Yeah, I know. I didn't put out a video yesterday. I was in Salem. I and was traveling, so I didn't really get a chance to do anything. But I hope you had a good month. I hope you learned a few things, and I've got a few more items on the why you do not get better at trading. It's really turning into something a little bit bigger than what I had imagined. I thought I'd wrap it up in a week. I didn't think it would go past two, but that's what it looks like it's doing. So I hope last month you had good money and risk management the entire month. And if you didn't, well, today's a new day and hopefully you can get back on track. It's not difficult. I've gone over this. I go over it every day, to some degree. So, looking at the weekly, or actually, maybe we should just go way over here and let's just take a quick look at the monthly. You can see right here, we've got a new month. And there's last month. Now, what happened last month? You see it broke out of the high. That's obvious. And it came back down and it closed inside the body. So it left the wick zone on the month off the top and off the bottom. So if you just traded that simple wick zone breakout trade, you're looking at pips. So what do we have so far here? Well, you can see so far in June, just a slight touch of the bottom wick, and now it's in the top wick. So, smart money, I would say you would probably look to go short right about there and look to go long right about there on the monthly. So those two levels, you should have that as part of your trading plan if you're trading the yen this month. Or, if you want to look at different pairs, like let's see, everybody likes, or many people like trading the euro, right? And so you can see here, it escaped the wick zone slightly. Now it's back in the wick zone. So right here, there's where you want to go long, and there's where you want to go short, okay? See, it's not that difficult. I mean, we're talking simple things. So you put those two numbers, you can put them in an alert indicator, or just have those lines, on your chart. So, anytime price gets near those lines, you're going to look to act. You're going to look to trade because price doesn't want to stay between those two lines. I mean, that's kind of what we have like with the Einstein trade. I mean, when you turn the computer on and you start looking, it's just like, and you set up your parameters, how far away price has to move before you act. So right here we've got let's see, we've got about we got a 5 pip range from here to here. So we're not giving price much room. Once it breaks out, then we can take the trade. You can see here, even though we only started here, but if you had these lines up, you can see here there was a breakout to the downside. It was only worth a couple of pips, but sometimes that's all you get. Sometimes you get a lot more. And you can see here we're about ready to go through the 0.5050 psychological area. But we know, once again, for the week, we filled the gap. So I did get, I think, one response, somebody trading the gap fill. They're making pips off of it. I'm glad to hear that I was able to help a fellow trader drain the banks. So you can see here on the weekly what happened. It popped through here, got out of the wick zone, came here, and it popped out of that wick zone. So a weekly wick zone trade, once again, you could call it hairy hindsight if you like, but when you set these things up, see, these lines don't move for the entire week. So you can trade those lines each and every day. Very simple. Very simple to do. It's not difficult at all. Not at all. And then if we come down to the daily, we can see once again, you see you had an inside bar here and then an inside bar. So inside bar of an inside bar. Now, you took that breakout out of that wick zone or off that daily high, and you can see you had a chance to make 70 pips if you punched out somewhere near that high. Once again, these aren't difficult trades. I mean, you don't really need anything but a few horizontal lines that you could plot by hand. Just drag them and drop them right on your screen, on your chart, and just sit back and wait. Or you can use, I've got a couple different alert indicators out there that you can download for free. You know where I post my indicators. For the mother loads, you could just search MT4, Google MT4 mother loads, and you can find them. And here we've got the buy zone. You can see it triggered once. We've got a second trigger here, and it was off to the races. Once again, maybe you don't trade the Asian, New Zealand, Australian session, so you would have missed out. But there might have been a trade somewhere else. But once again, simple horizontal lines taking the trade. Rat zone, you can see we put in a low here, we put in a high there, and there were some red rats making a few pips, maybe 10 pips or so. They had a couple of times. And right now it looks like price might crawl back into the red rat zone. You can see we're 21 pips, so we're 1 pip out of the zone, but there's a possibility. And our pivot trade, and this is interesting. Here we go. We got our tick, and you can see right here, price came down and just touched the pivot, reversed, and the rest is history. So you see this central pivot range, the purple pivot line, and then the top and the bottom of the channel here. So price went in there. Once again, simple horizontal line trade. It exited. I know I sound like a broken record, don't I? But you see, that's part of trading, repetition, getting better at what you do through repetition. And price action, here we go again. 3 ball, red at the line, and a short. 1 ball, hasn't hit the green line yet. But, I mean, if we, look back, we can see it. There's a 2 ball, red at the line, 2 ball, red at the line, 2 ball, green at the line, 2 ball, green at... So, once again, it's repetitive. It's the same thing. You can use one or more of these different ideas. But trading, really, if you think about it, it's pretty much a direction game. It's like, is it going to go up or is it going to go down from when I enter? That's pretty much all trading is. So you make a decision which way. You make a decision when you want to enter, and then you enter. And it's up to the market. You can't do anything other than money and risk management at that point. Up to the market. Okay, once again, we're showing these same lines from the previous day, green at the line on the H1, and there's money to be made. And we've got the wick zones, once again, in the wick zone indicator. Yes, I know I'm repeating myself, but I'm just showing you, different ways to skin the cat, different indicators, but it can be used the same. You can use, this is like 2014. This is how long it's like going on, 4 years, over 3 years using this, and it's just proven to be profitable day after day after day. We've got the holo set up here. Let's see, let's put it back to the M15. You can see here price went out, dipped back in, gave you another opportunity, and it was off to the races. Gave you one opportunity here to take that short off of the high, and there was pips to be made to the downside. Not much action at the moment. You can see here on the tick chart. Once again, using an M1 line chart, just showing the valley of the ask and the peak of the bid. As you can see, the bid has gotten over the valley of the ask right here, so it's been buying for the last 100 ticks. And in. Anybody using the IRB indicators, there were some really nice opportunities. There was a nice long trigger here, and there was a short trigger back here, and then there was a short trigger there. See the dots? We only have the current ones open, the most recent for each of the time frames. But the dots will show you the history. Otherwise, there'd be too many lines on the chart. Okay, and we already did that one. Missed pivots, you can see 524, 523. A couple of missed pivots. So you can see the most recent missed pivots are on the upside. And we've got some here on the downside. But that pretty much wraps up the week and wraps up the month, fellow traders. If you have any ideas, let me know. Somebody sent an EA to me for modification, and it's like I've been telling you guys for over a decade. I don't do EAs for public consumption. You know, if something goes wrong and you lose money, somebody's going to want to sue me. I'm not putting myself in that position. So that's why I don't touch EAs. Just a choice. Because remember, it's not what you trade, it's how you trade it. So enjoy the weekend, and I hope you had a great week and great month of draining the banks.